Okay, picture this. It's January 2021. Most of us are stuck at home, but online, a full-blown financial war is kicking off. And this was a battle that put a huge, anonymous army of internet traders up against the biggest, most powerful players on Wall Street. The prize? Billions of dollars. And the battlefield was the stock of a dying video game store. But you see, this wasn't just about the money. Not really. It was a rebellion. It was this feeling, captured perfectly right here on the Reddit forum Wall Street Bats, that the whole system was broken. And for just a moment, this chaotic, leaderless army of everyday people decided they were going to be the ones to fix it. $483. That's the number that sent an earthquake through the entire financial world. It was the peak price for a single share of GameStop on January 28, 2021. Now, get this. Just a few months before, that same share was worth about $4. So the question is, how on earth did that happen? Welcome to Money Lessons by History, where we learn from real stories of financial success and failure. Let's dig in and unravel this incredible story together.
So before it became this epic battlefield, GameStop was, just that store you'd see in the mall, a classic brick-and-mortar shop that was really struggling to keep up in a world of digital downloads. To the big shots on Wall Street, it looked like a sure thing to fail.
And I mean, the numbers told a pretty bleak story. Between 2018 and the early 2020s, thousands of stores just vanished and billions in revenue dried up. The company was bleeding out. And that blood in the water? Well, it attracted some of the biggest sharks in the financial ocean. And the weapon these sharks loved to use was something called short selling. It's basically a high-stakes bet against a company. Hedge funds would borrow a ton of GameStop shares, sell them immediately, and were absolutely convinced they could just buy them back later for pennies when the company finally went bust. By early 2021, GameStop was one of the most shorted stocks on the entire market. They were betting big on its collapse. But here's the twist. Not everyone saw a dead company walking. Enter Keith Gill. You might know him as Roaring Kitty on YouTube or Deep Fucking Value on Reddit. And he wasn't some random gambler. He was an old-school value investor. He did the research, and he came to a wild conclusion. Wall Street had it all wrong.
While all these Wall Street guys were publishing these super complex reports about why GameStop was doomed, Gill's whole idea was simple, powerful, and he just kept saying it over and over. I like the stock. He saw a real path for a comeback, new leadership, and he also saw that giant, dangerous pile of short bets that could, if things went just right, completely explode. And this is how much he believed in it. $53,000. Back in June 2019, Keith Gill took that much of his own savings and put it all into GameStop. And he posted all about it on Reddit, taking tons of heat from people who thought he was crazy, but he just held on, totally convinced he was right. And you know what? People started to listen. Over on the Wall Street Bets subreddit, this place famous for its pretty wild, high-risk trading culture, Gill's updates became the stuff of legend. A movement started to build. A decentralized army of everyday investors who started calling themselves apes, all brought together by this shared belief in the stock and a serious distrust of Wall Street. And this just lays out the battle lines perfectly. I mean, on one side, you've got the Goliaths. These huge, multi-billion-dollar hedge funds like Melvin with all their fancy algorithms, betting on failure. And on the other side, you've got the Davids, this swarm of regular people inspired by Keith Gill, betting on a comeback with their own powerful and kind of volatile weapon. So how did they plan to do it? With this thing called a short squeeze. It's basically a vicious cycle for the bad guys. See, when all the Redditors started buying up the stock, the price went up. This caused a world of pain for the short sellers, who were now losing billions on paper. Now, to stop the bleeding, they had to buy back the shares to get out of their bet. But all of their buying just forced the price even higher. It was a catastrophic spiral for them, and an absolute rocket ship for the Redditors. For months, the pressure just built up, slowly. The stock price crawled its way up from $4 to $18 through the last half of 2020. The fuse was definitely lit, but nobody, and I mean nobody, not even the folks on Reddit, could have possibly predicted the explosion that was about to happen. And then came January 2021. This was it. This was the moment the whole thing went viral. The memes hit the mainstream news, and the entire financial system was pushed right to the edge by a bunch of self-described degenerates from the internet. What's so wild is just how fast it all happened. The chaos was just immediate. In a single week, the stock went completely vertical. The trading volume was insane, hedge funds were getting wiped out, and then, on January 28th, right at the absolute peak of the madness, something happened that no one saw coming. The buy button was turned off. At its absolute peak, this is what Keith Gill's original $53,000 investment was worth. $48 million. It's an almost unbelievable return that turned a regular guy into a folk hero and a multimillionaire, at least on paper. And this was the carnage on the other side of the trade. Melvin Capital, one of the most respected hedge funds on Wall Street, lost over half of its entire value. That's $6.8 billion in 1 month. They never came back from it. They were forced to shut down completely in 2022. The Davids had drawn blood.
If you're enjoying the story, hit subscribe and stay with us, because the most important part is coming next.
Right when it looked like the retail army was about to win, popular trading apps like Robinhood just stopped people from buying more GameStop. They could sell, but they couldn't buy. And just like that, the rocket ship ran out of fuel, the stock price crashed, and people were understandably furious.
So, the big question is, why did they do it? The accusation from the public was pretty simple. It was a conspiracy. People were convinced that Robinhood was protecting its big hedge fund partners, like Citadel. But Robinhood's official story was that basically the plumbing of the stock market itself was breaking. The sheer number of trades was so huge that the Central Clearinghouse, the group that guarantees all the trades actually happen, panicked and demanded a $3 billion deposit from Robinhood, cash they just didn't have. So they claimed they had to hit pause or the whole system could have come crashing down.
So, after all the chaos, when the dust finally settled, what did we actually learn from this whole financial earthquake? Because it was a lot more than just a get-rich-quick story. It was a powerful and kind of terrifying masterclass in how modern markets actually work. So what's the big takeaway for you? Well, first, the power of people working together is absolutely real. Small investors, when they get organized on social media, are a force that Wall Street now has to take seriously. Second, it is a brutal, brutal reminder to never, ever invest more than you can afford to lose, especially when a stock is flying high on pure hype. Remember, this whole thing started as a smart investment, but it turned into a casino. And finally, it really hammers home the oldest rule in the book: diversification. Putting all of your money into one single meme stock is and always will be a recipe for disaster. And that leaves us with the one big, lingering question. Was this whole thing just a one-time fluke, a perfect storm of a pandemic, stimulus checks, and social media? Or was this the first real battle in a whole new kind of financial war, where the crowd, for better or for worse, now has a permanent seat at the table? If you enjoyed this story, leave a comment, give it a like, and don't forget to subscribe to Money Lessons by History, where every story teaches you how money really works.